So I know we're the last session standing between you and the end of the conference. But still, co-investment is a very interesting topic, so I'm going to try to keep you with us for the rest of, I think we have 40 minutes. And in essence, you know, co-investment, initially, I think, the history of it, it came from governments and supranational institutions who acted as anchor investors in emerging markets. And the history of it, it was, you know, if you look at the World Bank, the IMF, the European Commission, when they came to Africa first, you know, giving loans to governments and then giving money to projects and then companies, etc. So moving along, you know, the chain of assets, they realized that some kind of discipline, investment discipline, was only found in the private sector. And when I say private sector, it's not only pension funds, but it's also fund management companies and private equity companies. And so it made sense to bring them to these anchor deals in these frontier and emerging markets, if only to give it more legitimacy and more investment discipline, because the underlying idea would be, you know, if you're the World Bank or the IMF or the EU Commission, is that when you're co-investing with these sophisticated private sector companies, it forces you to be disciplined. If you are a private sector company based in New York or Montreal or Ottawa, the interest of co-investing with a government or IFA or supranational is that these emerging markets, these African jurisdictions, maybe the rule of law, maybe the fiscal transparency, maybe the legal and regulatory efficiency is not as good, as safe as in London or Montreal. So country risk is a big issue. And of course, being a co-investor with a blue chip supranational kind of shields you and protects you from the local risk and volatility. So I think this is how initially the thinking behind that notion of co-investment started. And I will turn to my fellow panelists and let them, you know, give us more flair and flavor as to how they came to the notion and how they approach co-investment in emerging market and Africa. And now I'm going to comment on what Melissa said earlier. Now, in full disclosure, I had never met Melissa or Mindy before, but we agree on something. I didn't notice. But we are all in different ways Kenya files. And the way that I had the same kind of reaction, sort of eureka moment, when I first met Kenyan pension regulators 12, 13 years ago at the OECD in Paris. I was really impressed by the quality, the intellectual quality of these bureaucrats from a lower middle income sub-Saharan country who knew about pension economics and regulation better than many of the French or British civil servants in the room, and that's where I was really impressed. And Kenya has certainly risen a lot in the past decade, and all the more because they have very little commodities, oil, diamond, gas, and this is the mixed curse of the curse of, you know, commodities. You know, many of these cash-rich, commodity-rich Middle Eastern or African nations. And then the same applies, of course, to Russia, Australia, and Canada. When you have a cycle of rising oil and gas, things are easy, and anyone can make a lot of money in all sectors, not only in oil and gas, but also real estate, etc. And all of a sudden, in just 2, 3, 4 months, everything crumbles, and because everything is correlated, once again, you start seeing people rioting in the streets in Rio. And Kenya, from that perspective, is a very good counterexample. It's a country which relied heavily on gray matter and on a human skills, education, and I think they're starting to reap the fruits of the plants that they have, the seeds they have planted 15, 20 years ago. Also, I think in many ways, if you allow me to make a metaphor, and using here the Milken Institute and Mindy on my side, is that in many ways, if you study the economic development of the Middle East and North Africa, 22 years ago, Israel was somewhere between Yugoslavia and Portugal in terms of economic development, i.e. Israel was a mediocre middle-income nation. In some sectors, it was behind Yugoslavia or behind Portugal. So in just 15, 20 years, it's remarkable how it has become a very sophisticated economy in many of the most advanced high-tech sectors. And in many ways, they jumped right from agriculture and socialist agricultural associations right away into high-tech, and once again, the sectors for which Milken has some expertise, financial services, biotech, IT, and I think in many ways, a country like Kenya, everything else remaining unchanged, has the skills to make that kind of jump, jumping, from a rural sub-Saharan Africa frontier market. They have the educational, intellectual capacities, and beyond Kenya, you have all the African diasporas in London, in New York City, and they are also contributors to investment in Africa by putting some of their own money into venture capital, real estate in their home country. And I think Kenya is also a great example of these diasporas reinvesting the money they earn in North America or the UK back home. And maybe if Mindy can tell us about a little bit of the kind of research they did, for example, with Israel in biotech or high tech.
Yeah, I think that, we did a project in Israel that I think you're referring to. We met with President Perez, and he was talking about human capital, which is basically what you're talking about, and how that is, we talk about obviously that human capital is the most valuable asset of any economy, and a lot of work that's been done over the years in that area. And so when we met with President Perez, he was talking about that, the people were the oil fields of Israel. And yeah, he called them perfume in a bottle. He said, our people are going out and then they're not returning. You can't get them back into a bottle. So anyway, we ended up doing a project, because basically they have like Teva, and then they have the Technion lab, and they didn't have sort of the domestic sources of capital or the sources of capital to put into growing these SMEs, to grow and to realize the potential and create jobs and things like that. And so we ended up working with the government there to structure a public-private partnership where the government, the Israeli government, committed $100 million. And then Orbimed actually won the tender and then raised the money, but we helped to design the structure. So as obviously a nonprofit, we don't participate in that in any way. But I would tie this back to Africa in that in the session that we did in Nairobi, and this is maybe a little bit of a question for some of my colleagues, Melissa and Wale were both there, but one of the Africans, a Kenyan actually, was talking about the projected growth rates, that many of the countries want to realize. They want 10% growth. We're just projecting 10% growth for the next 30 years or something like that. And they pointed out, as we were trying to bring more global investors in, I don't know if you remember this comment of no country has ever realized that type of return if they didn't have more domestic investment versus foreign direct investment. So I guess one question I would have as you talk about co-investment is the opportunity for sort of more education and sort of the evolution of sovereign funds and domestic savings.
Well, I actually am about to publish the report from that trip, which is about a month overdue, but I've just been running some numbers. I don't tend to get very bogged down in statistics, but the shocking thing is the GDP growth numbers in Kenya are actually a lot lower than you really think. And you see that in a lot of countries. If you look at population growth, you look at real GDP growth per capita, it's not a very encouraging picture in a lot of cases. And what really frustrates me about this is when I go to these places, you see government getting in the way of so many things that look like such low-hanging fruit. And time is of the essence. There is this population boom going on, and whether it's the domestic savings, whether it's reversing the outflows of corrupt money that's been stolen from some countries, whether it's getting rid of visa requirements, whether it's just getting the civil servants on board, the energy of the young people to create new businesses is being stifled in so many cases, and there's almost, I don't think there's a single country in sub-Saharan Africa that I spend any time in where the real underlying growth rate is enough. It's taking 7 years to get a power plant online. It's all the other things that could be opened up if government would just say, all right, run with it. Let's get this to work. So again, that's.
Yeah, I mean, well, yeah, I think my observation over this last few years, I feel like, I mean, in my prior life I invested across the world, and I was never really deep in one particular area, but now I've really been deep. I feel like I've gone to a PhD when it comes to Africa. I think the trick with Africa, frankly, is a lot of the numbers that you hear quoted around, you cannot trust them, right? And they generally don't make sense, right? April last year, we were in Nigeria. We had an investor conference. I think the following month or the same month, the government woke up and said the GDP was double. And nobody blinked. I mean, can you imagine if that happened in the US? Just like that, the GDP just doubled, right? So what that tells you is, and then if you've done some work in terms of the profitability of companies in Africa, which we have done, and which is what we look at, the likes of the telecom companies is generating incredible profitability, 50% EBITDA margins, 120 million subscribers. And it's not going to be like that Africa or Nigeria in this case has 120 wealthy people. So for some reason, it must be a case where people we think are not wealthy or don't have disposable income do and are spending it. And that's why these companies can be so profitable. The informal economy in these countries are just so huge that you can't. Have you ever run into a Nigerian that gave you one business card? They'll give you 3 business cards in like 2 minutes for 3 different things they're doing. And if you give them a business card, they'll look at you like, what's wrong with you? Right? I mean, so how do you capture that? You just can't. And so you have to really take these numbers with some measure. Well, you have to go back and say, why are companies doing what they're doing, right? Because to me, that's what's more rational, right? Wall Street Journal did a survey earlier this year. They asked about 200 companies of all the frontier markets, which of the countries you would like to go to. Nigeria was number 1, right? And then Vietnam, and then Kenya. There's a reason for that madness, right? I mean, this is because these companies are all about making money. When Jim O'Neill coined the term BRICS, I mean, I think people missed part of what he was focusing on was the demographics and the numbers. In as much as Kenya can be very attractive to you guys, my partners are from Kenya, so they know we go through this back and forth every day. The fact of the matter is Kenya has a population of what, 40 million people max? Nairobi is like one little suburb in Lagos, right? So when it comes to markets, I mean, I think that's what you have to think about as investors, right? You have to think about how big is this market so that if you're going to sell something that's $1 to 200 million people, that goes a long way right away. The way you think of Kenya is more as part of being a member of the East African community, where now you can get about 200 million people, right? That's what you have to think about.
Thank you, Wade, and I think on that contrast between Lagos and Nairobi, we'll have to wrap up this roundtable. I think we have just time enough for one question from the audience, if anyone wants to interject or ask us a question. If not, I will give the floor to my colleague Barbara, who will wrap up. Barbara?
Okay, well, we have to celebrate again the foundational basis that you guys have given us, and so please join me in thanking everyone.
Doing business in Africa, you can't afford to be without Africa Investor.